Welcome back to my channel. So today's topic is two types of entry after your bias. That is, you have done your own form of top-down analysis. I don't know how you do your analysis, that you can use the retail style, SMC or ICT. Now, if you can look at this structure, I'm going to use what? I'm going to use our 1 hour time frame. The first entry that we are all familiar with is when market does a shift in market structure, right? We are going to use our institutional reference point. What do I have here? I have what? I have an order block here. What do I have also in that other block? Because other block is so full, I'm going to measure it and get 50%. That's our mean threshold of that other block. And I'm going to delete my Fibonacci. Then what do I have again after this shift of market structure? What do I have again? I have what? I have my breaker block here, and also around that area I have a fair value gap around there. Can you see that? Now I'm going to go down to my 15 minutes. Some individuals will go down to 30 minutes or 45 minutes or 5 minutes. It depends on how you want to enter your trade. But now some individual also counter trade this to that zone. Now when market gets to this area, right, when market gets to this area, which is my signal reference point that I have marked, my breaker block has been violated. My It's now in my other block, but has not touched my mean threshold. So I know I'm in the other block, and also a valid fair value gap there. Now I'm looking for a swing point to be broken, right? With a body. Now what do I see here? Market has shifted with a body. This is refining my zone to a more lower form of entry, and I'll enter at my breaker mitigation block. Let's see. Now you have two ways of using this strategy, right? Which can be on your own safe side. You can enter the mitigation block, put in your low here, and target this high as your stop loss, and target this low as your take profit. Target that low as your take profit. Now, how do you enter the market in another different style? Now, these are another different styles that you can enter the market. Firstly, you can wait for a shift in market structure with a body, enter the mitigation block, or you can enter at the other block because indirectly inside here created a form of liquidity. Can you see trend line liquidity? Or you can enter at your fair value gap here. You can wait for a shift in market structure and you enter at your fair value gap. The closest fair value gap in that zone can be your form of entry. Now, the second form of entry, which is very beautiful, is what? Your wick. You wait for a what? A swing point to be created. One, two, three. And your entry is going to be when market breaks out on the third candle and you put your stop loss here. These are the two types of entry. The first type of entry is this, and the second type of entry is this. Then what do? You target your low the same way you targeted your low, but sometimes market can be very funny and violate you in a way. But these are the two type of entry. Your stop loss will be in the third candle, above the third candle, or you can place it above here or above the third candle. And what do you see? You get a 1 to 5 risk to reward ratio. Do you see it? So these are the ways, two types of entry that we do have in the market. I hope this video was very impactful. Don't forget to ask your question in the comment section. If you have any corrections to make, let me know and I'll put in some effort. And a big shout out to my coach again. Thank you very much.